Good day. Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Thursday, and I'm back. It's March 26, 2020, and boy, it feels to be back. Studios rebuilt, little tweaking things to do, but I want to thank Micron. Without their company, Micron Computer Centers, whoa. I had to live there. You move a studio and you don't realize parts, just moving them sometimes, things happen. In any case, we've had a nice 3-day rally in the stock market. You see that a relief package has made it through the Senate. It's yet to make it through the House and then, of course, get the president's vote. It's a large package. It's not a stimulus. It's a relief. And what we have to watch in the ag markets, and they're closed because I'm after right now about 5:20 in the afternoon, but to make a long story short, we've got to look and see what they've done because China has been buying again, and we've had a number of limit ups while I've been gone in the meat markets, and let's take a look at what the grains did. If we look at the weekly area chart of closes on soybeans, we're still at this point under the 18-week average. So the overall bias has been down, and the market has been working in this pattern from 930 into roughly the 890, low 890s, then down into that 850 area. Now, the market did a pretty good job of holding this last low on a weekly chart of closes. When we come over to the daily bar chart, you had what I call a vertical price break. You've had about a 2/3 bounce back in the market, and now you're sort of slipping a little bit. Let's see what the swing line's doing. They're not trending. You've had a pattern of lower lows, then a higher high. That is not a trend. And you've had two broad vertical moves, down, up, and now sort of stalling. I would expect that the market's going to try to fight, if it's in a bullish stance, against this 868 3/4, the red area, the 18-day average of closes. The 100-day average is up here at 916 3/4. If the market were to take out this 897 level, you could make an argument for the 916 3/4, 920.5 zone. Right now, though, I'm still not seeing a trend. I'm seeing a market with a lower low, higher high. And when I come over and look at where the market's at in momentum, it's overbought. In my view, any reading in the slow stochastics that has a number over 70 is an overbought market. So we've gone through two vertical price swings. We understand the reasons why. We should understand that China is back in the marketplace, and we should understand that to get on our good footing, they should be buying grains, other products from us. They probably need them as well. When you take a look at the meal market, come on, this has been a blast to the upside. I mean, you're looking at a market that went from roughly the 295.60 area up to 336.30 in nonstop action. Just before I stopped producing, which was only 4 or 5 days ago, and some of you didn't like it. Well, you know, it's free, number one. My subscriber videos are out, number two. Those made it. I was able to do those on the computers just about every time. But now that I'm back, it's good. In any case, momentum down. You stayed over the upper Bollinger Band, if you look at it, about 4 times. Staying over a Bollinger Band only happens 5% of the time, and that's these black bands. You see them? You had a pretty wide set of bands right here, wider than I normally look for to set up a trend. And the market still took off to the upside. And during that rally, you had first made a lower low, then a higher high. That's something, if you can catch it, great. I don't know how. In the oil market, this one was a fairly easier trade if you're a contra-trend trader. When you have an embedded reading, it means that the two numbers that make up the slow stochastic are going sideways under 20. Often what happens is you'll get a reversal on one of them. It'll close over the 20 level like you did here. And when that happens, if it's not gotten back, and I mean immediately the next day, be careful. It says that price has lost its downside momentum, and the market often tries to rally to the closest of the main moving averages, which is the 18-day average in this case. You can see where the market is right now at 27.18 is that number. This was March 24th. Here you make your run for the market on the 25th and you stalled right against it. Classic textbook what I teach in my charting course. In the corn market, we don't have a trend. You have a market that is working with lower highs and higher lows. So it's squeezing itself in. At the same time, if we come back to the momentum settings, you did have your embedded reading. See both numbers under 20, then the day before that, well, if I can get to it to make it work, sometimes that happens, but we'll get to it right here. It's not letting me, yeah, there it is. Then under 20 and then under 20. So what we have is a market that if you consider what's going on, it had its embedded reading, it lost it, and that often leads to the market trying to rally. So if this market can clear 352 3/4, it would absolutely not surprise me to see prices go to the 18-day average of closes. I repeat again. When you lose a slow stochastic that was embedded, you become oversold. You've got lower highs, higher lows. You're certainly not in a trend. In the wheat market, we have higher lows, higher highs, riding an upper Bollinger Band. And again, one of these patterns that when it made this lowest low, it just scooted right on up. Again, this is a lot of business where there was concern at that time. The Ukraine wasn't going to be selling grain to Europe. It was going to hold back. Remember, the COVID virus has got people holding on to whatever they own because they don't know what they're dealing with. Then you were running into problems, as you know, in ports in Brazil, you've got it all through Latin America. There are problems. South America, it's going on everywhere in the world. In the sugar market, you've lost the bearish embedded reading. That often leads to price making a run at the 18-day average. There's a contra-trend move. While the swing line is up, the market's still under the 18-day average. That means bearish bias. In the coffee market, in an uptrend. Now, this is one that I had thought that when we closed down all these coffee shops through America, Canada, and so on, that you'd actually see coffee prices slip. Not the case. The Chinese coming back to the market apparently is strong enough to overwhelm that, and the market has just taken off into an uptrend, and that uptrend was sent right when you got through this high, right here. It stopped at the 100-day average, and then it just moved right on up. It didn't even look back at this point in time. So that's been a pretty powerful action. But unlike a vertical move, this one at least had higher lows, higher highs. In the cattle market, we had two limit moves while I was on hiatus. How's that for the right word? You had them right here. You went back and fell down to fill them yesterday, and today the market's fighting at the 18-day average of closes. The settlement at 93.55 is under the 94.85 level, so the bias is down, the swing line is up, so the two are fighting each other, and momentum has pretty well flattened itself out. Last, in the hog market, we've had a bear market rally right up to the 18-day average of closes, that line in the sand that you hear me talk about so often. And you fell back enough today where you got to 68.75, taking out the 69.10 level. So what the market in reality terms did, it left this miniature uptrend that was trying on the swing line. Now it's got a higher high, lower low. You have no trend at all at work. I would just hold back on this market and see what it's going to offer. With that, I'm Ira Epstein, but I do want to remind you about what we do. We typically write from the Board of Trade, but we're all working out of homes and other studios that we have, and that's how it's going to be for a long time. In Chicago, they just issued an order, by the way, to close all the city parks because people aren't paying attention to social distancing. And along the lakefront, that is. I don't know what they're doing within other parts of the city. But we write about chart data. We write about fundamentals. We write about option plays, strategies in the futures markets, what we think is going on in all these different categories. So when we send the information out to our clients, we'd like to show you what they are getting. So if you'd like a short trial to this, all you need to do is give us a call at 866-973-2077. You can also go to our website, and that's the easiest way in this environment, and you'll see our free offers on the bottom right page. Click on any you want. We'll be certain to get everything to you. I'm Ira. Nice to be back. See you tomorrow.